Welcome to Hope Matters Radio.
We will be diving into the world of taxes today, specifically looking at how does one qualify when they're self-employed? Maybe you're 1099, maybe you're heavily commissioned. So Diane, we have some great guests in studio with us today. Who are we going to be speaking with?
Today we're going to be speaking with Ed Doran. He's got 25 plus years experience in the tax world, and I think he's going to have a lot to inform us about today in helping us deal with our clients.
Good morning. Taxes are exciting, by the way. Very exciting. My name is Ed Doran. I'm a tax manager with Isdana & Company. 30 plus years tax experience, mostly in the public accounting area. I do individual taxes, nonprofit taxes, estate and trust taxes. So hopefully we'll be able to add something to the show today.
It's crucial that we get the word out that we need to plan, and the tax component, qualifying income, it's a very gray area when it really comes to the underwriting facet of what are the guidelines and what can we or can't we qualify with. So who else do we have today, Diane?
We have Lori Ravich. She is the operations manager / underwriter for the Hope team. Can you tell us more about your role at the Hope team?
Well, basically my primary role is underwriting full-time. I'm also the operations manager. I've been in the mortgage industry now for 23 years. So I do Veterans Administration loans, so I'm LAP approved. FHA loans, I'm a DE underwriter.
So you carry, in essence, the highest level of credentials that an underwriter could have in today's lending arena. So in essence, we could say that you and Ed could either be partners or could be rivals, depending on left hand and right hand. Ed, I'm sure you receive phone calls from either clients or from underwriters asking how was the tax basis structured for either a specific entity. May the client have a partnership or an LLC or an S Corp or C Corp set up? How did you derive their income? How did you get to the bottom line? You're actually a crucial piece to helping your client obtain financing along the way.
Right. Well, when you talk about self-employed individuals or individuals, you're either going to have a W-2, which ends up as a W-2 employee, or you're a self-employed individual, or you're going to end up on a Schedule C, which is your 1099s. Mostly it's 1099 reporting. So that's pretty much, you're pretty easy where to put it's either going on the W-2 line or it's going to go on the Schedule C. If you have a self-employed individual, at that point, a lot of them are taking care of their own expenses and their own bookkeeping, which makes it a little bit of a nightmare because the records you get and the information you get, you've got to sift through it to make sure that you're picking up all the income, all of the 1099 income, and are you picking up all the appropriate expenses? We were talking about depreciation. Are they properly depreciating the assets, which is a big one? Are there certain expenses that, for instance, meals and entertainment, that need to be, part of it has to be excluded and is not deductible on the return. So we need to carefully look at all the expenses that are coming through. When you talk about other types of entities, partnerships, S Corps, you're going to get a K1 if they're a partner in a partnership. If they're a shareholder in an S Corp, you're going to get a K1, and that income is going to pass right on to their tax return. Depending on the level of activity, it could be self-employment income, which could end up subject to self-employment tax. But you're going to look at all those pieces of income on their 1040, and then you would look at the same thing and then question, well, where's this income from? How active are they in the partnership? Can they get money out of the S Corp? Can they get money out of the partnership? Is there cash available to them? And I assume those are the kind of conversations we would have.
Yeah, I would go to you if there was anything that was kind of outside the norm, a loss or something where I would need to go to you, Ed, and say, can you explain the reason for this loss? Is this something that's going to be recurring next year? Is this something I need to be concerned about?
Exactly. And that's probably mostly on the Schedule C side. If you have losses coming through on a K1, either from an S Corp or a partnership, that could affect page 1 of the tax return, which is going to affect the bottom line, the adjusted gross income, which may be something you're looking at in addition just to the Schedule C income. What's the whole picture look like? Is there cash out there coming from other places? Then you get into the whole complication of, are they passive? Are they active in the activity? Is it a passive loss? Is it an active loss? Are there passive losses being suspended that are going to hit the tax return in future years? You always look back the last 2 years or 3 years, but we'll have an idea, as Jim said, if we have planning, we know what they're going to be doing in the next few years. Do they have a big contract coming down the line? And we'll let you know about that. Now, I don't know if that's something that's like, well, we'll deal with that later. I'm more concerned with what's happened in the past.
Yeah, and we're projecting forward and looking for anything that might be, if we're seeing a decline in income, well, that's a concern of ours. We're going to go to you and say, what's the reason for the decline? Is
Exactly.
this something I need to be concerned with?
Exactly. Yep.
Hope Matters Radio is brought to you by the Real Estate Radio Network. Visit HopeMattersRadio.com for more information. That's HopeMattersRadio.com.